Hello friends, welcome back to BR Education Hub. If we do not want to invest in stock market, often we are confused where to invest. Is it mutual fund, ETF or index fund? So in next few minutes, I will try to help you out. Mutual funds and index funds both works in a similar fashion. However, their investment approach is little bit different. Mutual funds can invest in the diversified stocks, which means that it also has little bit of higher risk as compared to the index fund, but then you also have an opportunity to maximize your returns. However, in case of index fund, it only invest in the stocks which are specific to that index. For example, if it is launched for Nifty 50, it can only invest in stocks which are related to Nifty 50. Similarly, if it's launched for Sensex 100, it can invest only in the stocks which are related to Sensex 100. Now, exchange traded fund in some way similar to index fund, that they invest only in the stocks related to that particular Sensex or Nifty, but it differs as you can trade in the ETFs on a real time basis. The way you trade in the stock market for other stocks, you can sell or purchase on the intraday basis or also for the short term. So let's look at some comparisons between these funds. In case of mutual fund, the different investors pool their money and you invest in the diversified portfolio. However, in the case of ETF, you can buy a combination of stocks or bonds for a specific market segment, like it could be Nifty 50 or Sensex 100 or any other specific segment. Now, in index fund, this is similar to mutual fund, but again, you can buy only for specific index. Mutual funds are traded through mutual fund service providers or broker because you cannot trade it into the real time. And similar is the case for index fund. However, ETF you can trade on real-time basis in the stock market. So intraday trading is not possible in mutual fund and index fund. However, this is possible in ETF. Now in mutual fund or the index fund, you invest via AMC asset management company. So you have different asset management companies in India like HDFC or ICICI Prudential, Axis. So there are a number of such companies available. And in ETF, you always invest via stock market. So the way you are investing in other stocks, again using some brokers or some basically service providers, similar fashion you can invest in the ETF also. In mutual fund, there are little bit higher expense ratio. In index fund, the expense ratio is basically less as compared to mutual fund. And in case of ETF, you will have to pay the same charges that you are paying for any other stocks, purchase or sale of any other stocks. Now, mutual funds and index funds are again redeemed with the AMCs. However, the ETF you will have to sell in the stock market like any other stocks that you must be holding. So after looking at the comparison, the question arises where to invest out of these three. And this will depends on how actively you can track market or you want others to track the market for you, and what are your short term or the long term goals. If you can track the market effectively of yourself, then definitely you can invest in ETF in the real time basis. Depending on the market fluctuation, you can sell and purchase it. Otherwise, for the long term investors, mutual fund and index funds are better. Now, between mutual funds and index funds, if you want a minimum involvement of the market decisions, then you can invest in the index funds, as these will be driven by how the index performs in the Sensex. However, if you want to take little bit of higher risk with a aim to get little bit better returns, then you can invest in the mutual funds, and you can use mutual funds both for your short-term goal as well as for your long-term goals. I hope I am able to clarify your doubts on mutual fund, index funds, and ETF. If you like my video, please share it, please subscribe to my channel, and please also give comments for any specific queries or questions you have. I will try to answer you. Thanks and stay tuned for my next videos. Thank you.